Well, I'm going to take a break from my garden again here to talk about more S corporation issues. And today, or this particular video, is about whether your S corporation has C corporation issues. Now, having C corporation issues would result from your S corporation having previously operated as a C corporation. And a lot of S corporations never did that. A lot of S corporations made an S election the day they incorporated, so they wouldn't have any of these issues. But there are several tax gotchas that come up when you have an S corporation that was previously operated as a C corporation. C corporations have rules around distributions that lead to what we refer as the double tax problem. And you may have heard of this double tax before. The concept is that a C corporation files its own tax return, pays tax on its income, and then that income is added to the corporation's earnings and profits. The owner of the corporations doesn't pay tax. The shareholders will not pay tax on that income inside the C corporation initially. However, when the corporation, or if the corporation, makes a distribution to the owners, that payment is compared to the corporation's earnings and profits. And if the company has any earnings and profits that have been built up over time, that distribution is considered a dividend, which is taxable on the owner's personal tax returns. Although the dividend may be a qualified dividend with a preferential tax rate, we refer to the dividend tax as a double tax because the corporation already paid tax on the same earnings when it filed its own tax return. So, under the S corporation structure, income earned is generally not taxed on the corporate returns. Instead, we say it's flowed through. And I've talked about that on other videos. So if you need more background on S corporations, please check out my other S corporation videos. But income from an S corporation is flowed through, and it's ultimately taxed on the owner's personal tax returns. So, what happens if a C corporation has built up accumulated earnings and profits, which would be taxable if distributed, and then the C corporation makes an S election? Voila, we're an S corporation. Does that mean we never have to pay tax on those earnings and profits as a dividend? We never have to pay the dividend tax? No, unfortunately, contrary to what we might hope, the potential for an owner being taxed on a dividend does not just go away. Those earnings and profits, what we call the accumulated earnings and profits, are undistributed C Corp earnings, and they're just waiting for someone to receive them and then pay the dividend tax on them. Well, not just somebody, but a shareholder of the company. If an owner is deemed to receive a distribution from the accumulated earnings and profits, it's going to be taxed as a dividend. That's true even if the corporation is already now an S corporation. So electing S doesn't get you out of that fundamental fact, which is, as an S corporation owner, if you receive money from the prior C corporation earnings as a distribution, it will become a taxable dividend, just like if it were still a C corporation. So how do you know if an S corporation distribution actually comes from the C corporation earnings, right? This is the thing about tax law. Not everything, we say these things, I can say them really quickly in a video, but each of the sentences that I say and each of the statements that I make can have a lot of different interpretations, or they're not obvious. There's not an obvious answer to it when you really dig into it, right? And so the S corporation, if you've made an S election and it's earning income as an S corporation over time, how do we know that? How do we know when we take $1 as a distribution out of the company, whether it came from the C corporation earnings or the S corporation earnings? I'm going to discuss that more in other videos. So I'm going to get more into this concept of when is a distribution from an S corporation that used to be a C considered a taxable dividend. But the good news is that it's not FIFO. It's not first in, first out. We have the benefit. Tax law gave the taxpayer, the shareholders, a benefit here by saying, well, the default presumption will be that if your S corporation is earning money, that any distributions can come from those S corporation earnings first before we've dipped back into the C corporation earnings from prior years. More on that in some other video. For now, I just wanted to bring this up, that the distributions have a potential tax effect, a taxable dividend effect that you may not be expecting if your company used to be a C corporation. But distributions are not the only issue for S corporations that were formerly C corporations. Some of the other issues that we can tackle and maybe discuss in other videos would include the potential for losing your S election altogether due to what's called the excess net passive investment income. So if your company ran as a C corporation, accumulated earnings and profits, and then elected S and is operating as an S corporation, there's a tracking of how much what they call passive investment income is. And that's the kind of income that is. It's more technical than what I'm going to say here, but the kind of income it is would be things like the company earning interest, dividends, rents, other kinds of passive, what we might think of as portfolio type of income. Not only could you use your election on that, but another potential is that you actually, the S corporation could actually have to pay a federal tax on that, an excise tax. And you may have heard me in other videos say, well, S corporations generally don't pay federal income taxes, and that's true unless they were prior C corporations, and this would be an example. If you had a prior C corporation with accumulated earnings and profits, and that company is deemed to have excess net passive investment income, they could be subject to an excise tax. Now, it would take a whole video or more to go through that calculation and all the mechanics on that, so I'll leave it at that just as a possibility, right? The other possibility here, if your company used to be a C corporation, there's the possibility for what we call the built-in gain tax. And the idea there is that if you were to sell assets in the company that had appreciated in value while it was a C corporation, and then distribute the proceeds out to shareholders, you would have had a double tax. You would have sold the asset, the C corporation would pay tax, you took the proceeds and then gave it to shareholders as a dividend, the shareholders would then pay a dividend tax, a double tax. You don't escape the potential double tax automatically on built-in gain by making an S election. There is a built-in gain tax, but of course there's a lot of rules and mechanics around how that is dealt with and handled, so that would be another topic. Again, just an issue to consider. All of these issues that I've thrown out here revolve around the corporation previously operating as a C corporation. So if it's always been an S, remember, no issue. You don't have any of these issues that I've been talking about. So just to highlight the three issues that I brought up for you here, one is if you operated as a C corporation, your S could have taxable distributions that are C corporation dividends to consider. That was one. The second one is if you operate as a C corporation and have accumulated earnings and profits, your S corporation could have a problem with excess net passive investment income. It could either cause them to lose their S election or pay an excise tax. That's two. And then the third issue that I raised for you is if you were an S corporation that operated as a C corporation, you could be subject to what we call the built-in gain tax if you ultimately sell assets that appreciated while it was a C corporation. There's a lot around that, but that's three, right? So three issues. If you think you might have those issues, it would be worth investigating more, talking to your advisors. That's it for now. I'm going to get back to gardening. Thanks.